Hello and welcome. This is the Market Wrap. I am Agam Vakil. A step forward, two steps backwards. That's how it's turning out for the Indian equity benchmark indices, with the Nifty once again showing us a decline. As you can see, a drop of nearly 68 points, Nifty closing at 10,628. Now, before I talk about those which are bear down on the indices, I just want to address a few stocks which have remained buoyant in today's day of trade. Dr. Reddy's Laboratories up 2.4%, Infosys, Lupin and Hindalco Industries, well, to a certain extent contributing to those which were gaining. On the losing end, however, substantial weakness coming in Indiabulls Housing Finance. Perhaps the majority of, and the big reason why we have seen that weakness on the indices is because of HDFC Bank declining by as much as 3%, and that's followed by Bharti Airtel doing its to contribute to that decline on the indices. And of course, we have Adani Ports and Bharti Infratel also declining. Now, a trend that we have seen over the past few days is also the worsening advanced decline ratio over the Nifty 500. And as you can see, we're just looking at one gainer as against four losers. In terms of losers, PC Jeweler continues its decline, down 16%, Merck down 11%. Do remember, it was a very, very strong week for Merck, so we're looking at some profit taking coming through. Intellect Design, Arena and Quality declining. Quality now below the mark of 40, substantial weakness coming in there as well. On the gaining end, surprisingly, Vakrangi is one of those stocks which are now locked in upper circuit. Sadbhav Engineering's sale as well as Gateway Registry Park are advancing by as much as 4%. Sun TV Network not too far behind. However, there are some concerns when it comes to the broader markets, and I'm going to bring in my markets editor Neeraj Shah to give us an idea or a better picture of what's really going on in the markets.
I confess not knowing better picture, Agam, but yeah, it certainly looks very, very painful. The volumes in like last couple of days, the first days of the new series have also looked high. And today the rupee reversed a little bit of the early gains that it had, presumably because the demand wouldn't have been that large for HDFC. That in part was probably reasonable or responsible for the currency doing what it was doing on Friday's session as well. Bond yields at 7.88. I think the market is wary of what will happen. Comments that have come in on global forums from the RBI governor as well seem to suggest that all may not be what the market wants it to be come Wednesday in the RBI policy. So that too impacting. There's obviously there's just a couple of things. One, remember Friday Dow ended well. Today the European markets, when we shut shop, were trading well, and we still ended up in the red, and the small caps were down almost 3%. That was one. Today Manish Sonthalia of Motilal Oswal was with us, and he was saying that there is in part reason, the technical reasons as to why the mid caps and small caps are doing what they're doing. ASM is just one such reason, but the categorization of mutual funds changing is also leading to this pain.
Sure.
Maybe once the technical correction in mid caps and small caps is over, you find some semblance of sanity. Even if the Nifty doesn't go up, you just want the mid caps and the small caps to do reasonably well for the market sentiment to remain buoyant. That is missing right now. Probably that's one key problem. You would have had a sense of what's happened on the derivative side any which ways today. Maybe some pain, and pain was there at the derivative side too.
Absolutely. It does get magnified in the derivatives end of things because there are leverage tools. Thanks, Neeraj, for bringing us those details. And you know, that said, we need to understand the different levels that we should be watching out for, and this is what our technical analysts are telling us about the benchmark indices. Listen in.
It's a skewed market. The advanced decline line is woeful. The mid caps and small caps are terrible. Nothing seems very positive. The bank credit policy could provide some fireworks, but if HDFC Bank's fireworks couldn't fire up the Bank Nifty today, I am not quite sure what is going to happen. So I'd be cautiously bearish. I'd wait for the event risk to pass, though I don't think there's much of an event risk, but whatever. So once that is out of the bag, I have a feeling that things are not looking good. So markets are getting heavy. 10,800, 27,100. I know 27,100 seems a far cry now. So 10,8, 27,1. These are the levels to watch out for till they don't get taken out. And if they don't get taken out in the next 5 to 7 trading sessions, it's Humpty Dumpty fall down for the markets.
At present, 10,600 act as a major support for Nifty. So till the time these levels are not taken away, it's better avoid shorting Nifty and Bank Nifty at present levels. As far as levels of Nifty is concerned, 10,600 will act as a major support for Nifty till the time a closing below 10,600 is not seen. It's better to avoid fresh short at these levels.
So that's what you have in terms of some of the levels that you can watch out for. Some weakness is expected from the technical analysts out there. Let's shift focus to sectors and stocks. Let's talk about sugar, and we have Yash Upadhyay to join us and give us an idea about what's going on with the sugar sector. Yash.
So basically, ICICI Sugar, which is the global benchmark for raw sugar prices, that has capped the best monthly gains in the month of May, gaining more than 9%. So if you could see the ICICI Sugar price, they have gone up as much as 10% in the last 1 month, which is the highest since September of 2016, on the back of two key triggers. First being the announcement of a nationwide strike in Brazil following of the Truckers Association, following which the supplies were disrupted. This was on the back of their demands to reduce the higher fuel prices, and as a result of this, production in most of the Brazilian sugar mills, they had halted due to the lack of diesel required to run these plants. Also, one of the top Brazil sugar manufacturers that came out on Friday and said that it would have to declare a force majeure for some of its contracts due to its inability to serve those contracts on account of lower inventories that they have. But back home, even in India, the sugar prices, they have moved up quite significantly, and over the last 1 month in May, they've gained as much as 6.5%. So that comes on the back of the government's announcement on May 21st that it would be considering the proposal for imposing a buffer stock of close to 3 million tons in order to remove the excess supply from the market, over and above the proposal to fix an ex-factory benchmark price also to support the prices from falling any further.
All right, Yash. Well, thanks for that. And of course, Yash will continue to give us updates about the way sugar has been moving. That said, in terms of the Nifty, there was one factor alone, perhaps, that could have actually influenced the down move of the Nifty, and that is HDFC Bank. Now, we have seen a lot of traction in HDFC Bank over the past couple of days. Today was no different. The only way it was different that today HDFC Bank was trending downwards. We have Yatin Mota as usual to give us an update about what's going on out here. Yatin.
So, Agam, everybody was expecting buying which could happen in HDFC Bank because the FI limits would have been revised, and probably almost 4.3 crore shares would be available for FI as a headroom to buy shares of HDFC Bank, close to $1 billion plus. From Macquarie, Morgan Stanley, everybody had a positive view since the new mechanism of FI monitoring was to be in place. But today, if you look at the intraday chart of HDFC Bank, the kind of losses that we have seen, almost 150 rupee cut coming in from the day's high, and clearly we couldn't see any big FI buying which happened in trade today as anticipated by market participants, and probably that also added to the pressure points as far as HDFC Bank is concerned. I'll just look at the intraday chart as to how really did the trade shape up for HDFC Bank, and you can see that intraday graph opened close to 2050 rupees or 2150 and ended at the day's low below that 2050 mark. So clearly it has been a bad day for HDFC Bank. Of course, ahead of the event, we had shares which rallied significantly, but at this point in time it looks like more of a profit taking, less FI participation. So all of these factors, running adverse for HDFC Bank in trade.
Right, Yatin, thanks for bringing us those details. Of course, HDFC Bank is one of those which have a high weightage on the index, and it is likely to influence the movements of the index as we move into trade over the next couple of days as well. But there is yet another large company that is in focus today, and that's Coal India. Well, we do have some updates with respect to that, and we have Nikki Mirchandani who's joining us to give an idea about what's going on. Nikki?
So down and out, it has missed the target yet again. Not a surprising number, but then robust set of numbers in terms of for the month of May. Production has registered a 16% uptick, and YOY growth uptick in production as well as offtake numbers come on back of the favorable base effect. Now remember that we've seen a decline of as much as 4% in terms of the production numbers for the company back in May 2017. It's an 8% miss as compared to the targets, given that all the subsidiaries except NCL reported a shortfall in terms of the production. Offtake was up as much as 14%. Robust set of numbers there to around 52.9 million ton in this month of May. However, again, misses the target by as much as 9%. What Nomura has to say, it has maintained a neutral rating as well as the target price of 332 per share, and has said it forecast the production as well as offtake to around a growth of around 8 and 7% respectively over FY18, and it says to achieve that that kind of growth, the company will have to imply a run rate of at least 1.7 million ton production per day, at least for the first 10 months of the financial year 2019.
Okay, Nikki, thanks for bringing out those details. So Coal India also will remain in focus. But considering we have seen some weakness, we need to keep an eye on some of these big weights, HDFC as we have mentioned. But with that, it's a wrap on this edition of the Market Wrap. But lots more lined up, so stay tuned in Bloomberg.